Hey everyone, recently I did a video on Tata Chemical and discussed the business and future of the company. Now there were multiple requests to analyze Navin Fluorine. So here I am with the fundamental analysis on Navin Fluorine. In the last 3 years, Navin Fluorine share price has zoomed 6 times. The question is, can it continue to grow at fast rate? We'll figure out in this video. As usual, we'll cover the business profile of the company, its leadership, future growth prospects, key risk and competitor. And then we'll discuss the financials along with valuation. But before we proceed, this video is only for educational purpose. Please do your own research before investing your money. I've also recently created a video on 50 stock for next 25 years. I would strongly recommend watching it. And if you want to learn step-by-step process to do stock fundamental analysis, you can explore my online course. Alright, let's get started. The history of Navin Fluorine dates back to 1967 when the company established the first integrated fluorochemical complex to produce refrigerant gases and a range of inorganic fluorides at Surat. So Navin Fluorine has over 50 years of expertise in inorganic fluoride chemistry. If you look at the current business structure of the company, it has 3 major business verticals. First business vertical is specialty chemical. Then second vertical is CRAMS, that is contract research and manufacturing service. And third vertical is refrigerant gas, inorganic fluorides and HPP, that is high performance product. Now let us try to understand each business in detail. First business vertical of Navin Fluorine is specialty chemical. Although Navin Fluorine commenced its business in 1967, it started specialty chemical business in the year 2000. In this vertical, company produces niche fluorine-based molecules with downstream application in crop science, pharma and industrial chemicals. The importance of these fluorine-based molecules can be gauged from the fact that almost 40 to 50% of the upcoming new products in crop science and life science segment has fluorine molecule in it. Company has recently added 3 products in this vertical, 2 from crop science segment and 1 from performance chemical segment. Navin Fluorine is also engaged in the development of a new product around fluoropyridine platform in FY23 with multi-year revenue possibilities. Now second business vertical is CRAMS, that is contract research and manufacturing service, also known as CDMO. This vertical was established in 2011 where Navin Fluorine offers manufacturing services to global companies worldwide. So basically within this vertical, Navin Fluorine empowers its client to launch quality product on time. Company's business quality can be gauged from the fact that 7 out of 10 leading pharma companies are client of Navin Fluorine. This vertical also has great potential due to global companies looking for plan B, that is alternative to China. As per reports, there are over 8,000 products in clinical trial stage. So CRAMS market is at the cusp of sharp growth. Then third business vertical is the oldest vertical in the company since 1967. It is the refrigerant, inorganic fluoride and HPP, that is high performance product business. Company offers high quality and high performance refrigerant gas for various refrigeration and air conditioning applications like your ACs, commercial and industrial refrigeration unit, chillers, packaged air conditioner, domestic refrigerators, industrial refrigerators, etc. Navin Fluorine is the first producer of R22 gas in India and its Mafron brand in the refrigeration sector has a sustained leadership. Then Navin Fluorine has a large portfolio of inorganic fluorides with downstream usage in sectors like steel, glass, oil and gas, abrasives, solar, electronic products, life and crop sciences, etc. For example, hydrogen fluoride is used in solar cell fabrication, that is used in solar panels. These inorganic fluorides are also used in manufacturing stainless steel that would continue to see good demand. If we try to understand the revenue breakup of each vertical 11 years ago and now, it will give us a good clarity in terms of where the company is heading towards. So 11 years ago in FY11, specialty chemical contributed 27% in revenue. High performance chemical contributed 73% in revenue and CDMO business was nil. Fast forward today in FY22, specialty chemical contributed 40% in revenue, high performance product contributed 39% in revenue and CDMO contributed 21%. Clearly the specialty chemical and CDMO vertical are growing quickly. I hope now you got a good clarity on the business of the company. Recently, Navin Fluorine has implemented a new organization structure where 3 business units of the company will be led by 3 CEOs with full P&L responsibility. So it is almost like 3 sub-companies within Navin Fluorine, each responsible for individual growth of their division. Company has chemical complex at Surat spread over 135 acres that manufactures refrigerant, inorganic fluorides and specialty chemical. Then company has CGMP compliant facility for CDMO in Devas, and a new greenfield investment is coming up in Dahej. If you look at the promoter and leadership of the company, Mr. Vishad Mafatlal is the chairman of the company. He is an industrialist having experience of over 25 years in the field of textile and chemicals. He holds a Bachelor of Science degree in Economics from University of Pennsylvania Wharton School. Navin Fluorine MD is Radhesh Welling with over 25 years of work experience. He has obtained Mechanical Engineering degree from NIT and has done his Masters in International Business from IIFT and has also done his MBA from IMD Switzerland. Overall, Navin Fluorine has a well-established position in fluorochemical industry and a well-experienced management team of over 50 years of experience and extensive knowledge. If you look at the future growth prospects, fluorine is an integral chemical in many industries including refrigerants, dyeing, automotive, electronics, agriculture, textile and pharmaceutical. And the demand from each sector would continue to increase. For example, refrigerant gases are the key component of AC and refrigerator. And we all know that the demand for ACs and refrigerator is only going to increase across domestic and industrial usage. Likewise, there will be high demand in agriculture sector for crop protection, especially for new age chemicals that are less toxic and more environment friendly. Again, fluorine is an important building block in agrochemical sector. Similarly, fluorine is a key component in pharma sector as the demand for medicine would increase multiple times in the future. But the biggest reason for explosive growth in chemical sector in India is due to China Plus One theme, where every global company is looking for alternative to China and India has emerged as top alternative. Within chemical sector, specialty chemical would grow at even faster rate, and company like Navin Fluorine with an established track record, top quality product with focus on sustainability would grow even faster. Navin Fluorine is investing across R&D and building new plants to cater to this growing demand. Company has recently done a capex of more than 1000 crore and another capex worth 500 crore has been announced. Recently, Navin Fluorine has made a few big announcements. First announcement is a $410 million multi-year contract in high performance product. Navin Fluorine had entered into a $410 million contract with Honeywell International for the manufacturing and supply of high performance product in the fluorochemical space. Revenue from this new plan will start from Q2 of FY23 and it would be multi-year revenue pipeline. Then second announcement is launch of new products in agrochemical through multi-purpose plan. Navin Fluorine has launched new products in agrochemical sector that would again boost its future revenues. So overall, the future growth prospects are looking very bright. The biggest risk for Navin Fluorine is raw material price fluctuation. Some of the key raw material of Navin Fluorine include fluorspar, sulfur, chloroform and boric acid. And they are commodity chemicals and subject to price fluctuation due to demand-supply dynamics. So increase in this raw material price can impact the profitability of the company. Within these chemicals, fluorspar is the most important raw material for the company, and to reduce the raw material risk, Navin Fluorine has backward integrated through a 25% joint venture with a fluorspar company in India. This helps them to get tighter control over the supply chain and diversify sourcing away from China. Then the next set of risks include your high inflation and supply chain disruption that can impact the business and profitability of the company. Now, before you invest your money in Navin Fluorine, you should be aware of one very important aspect. Navin Fluorine oldest business and its flagship product refrigerant R22 gas is getting phased out by 2030 as it depletes the ozone layer. And that is the reason Navin Fluorine is reducing its dependency from refrigerant gas and focusing towards specialty chemical and CRAMS business. Although the company has already ventured into new age refrigerant gases that do not harm the ozone layer. Now, if you look at the competitors of Navin Fluorine, it faces competition from both domestic and global companies. In Indian listed space, its major competitors are Gujarat Fluorochemical and SRF Limited in fluorochemical space. Now let us look at the financials of the company. Within financials, if you look at the revenues of the company, it has grown consistently. It was 742 crore in FY17, then jumped to 913, then 996. Year on year, there is a growth in the revenues of the company, and the trailing 12-month revenues stood at 1,524 crore. Overall, if you look at the CAGR growth, it stood at 14.69%, which is pretty decent. Next, if you look at Navin Fluorine profits, it is basically a profit before tax. It has grown from 182 crore in FY17 to current levels of 367 crore, and the CAGR growth in profit before tax has been 14.29%. So both revenue and profit growth of the company has been decent in the range of 14-15%. Next, if you look at the operating margin of the company, it is well above 20% consistently year on year. In fact, if you look at it, in FY17 it was 21%, and if you look at the recent margin, it stood at 24-25%. So in company's profitability, its operating margins have actually improved. Next, if you look at the ROE and ROCE, if you first start with ROE, it was 16, then 18%, then 13. And if you look at the latest ROE in last 3 years, it's 15.8%, then 14.3, and in trailing 12 months stood at 15.3. So overall, the ROE is okayish, and if you look at the return on capital employed, it is well above 20%. If it was 21%, 26%, 20%, and if you look at the latest return on capital employed, it stood at 18.7%. So in terms of both ROA and ROCE, again the profitability is looking decent. Next, if you look at the debt to equity, company is virtually debt free over the last years, and the latest debt to equity is 0.07. If you look at the reserves of the company, reserves have grown year on year. It was 825 crore, then jumped to current levels of 1834 crore. Next, let us look at the share price movement of the company. Now, if you look at the share price movement of Navin Fluorine around the period of July-August 2019, just 3 years ago, it was at levels of 600 rupee. And look at this, in 3 years, share has jumped more than 500%. Now, obviously, one of the biggest reason has been the China Plus One theme, and due to this, majority of chemical companies have seen a sharp jump due to multiple positive re-rating in the valuation. But interestingly, if you see, unlike other chemical companies that have seen correction in their share price, Navin Fluorine has not really seen, it was stagnant, but it did not see a lot of correction. So if you look at last 1 year of movement, it has been a sideways movement. Now, at current levels, it is trading PE ratio of 74. So Navin Fluorine current share price is 4,200 and its PE ratio is 74. So in terms of valuation at current PE of 74.13, it looks expensive to me. Now let us look at the shareholding pattern of the company. So this is the shareholding pattern. Promoters holding in the company has reduced slightly. It was 31.03% in September 19, then it fell down to 30.51 and then slightly reduced to 30.2, and currently it is 29.7. So over the last 12 quarters, promoters have slightly reduced their holding from the company. However, the positive news is that both FIs and DIs have increased their shareholding. It was 17% for FIs in September 2019 and has increased to 21.43%. DI shareholding was 17.86% and currently it is 20.79%. If you look at the recent shareholding pattern, FIs have been the net seller. They have sold their shareholding from 26.65% to current levels of 21.4%. However, DIs have been the net buyers. Their shareholding has increased from 15.17% to current level of 20.79%. So, in spite of promoters selling their shareholding slightly from the company, both FIs and DIs have increased their shareholding. That shows the confidence of institutional investors in the share of Navin Fluorine. Friends, there is no doubt that Navin Fluorine is a fundamentally strong company. It has a well-experienced leadership, dominant position in fluorochemical industry and bright growth prospect due to increasing demand from end industry as well as China Plus One theme. Company is also expanding its product portfolio and diversifying its customer base. Financially also, company is looking very sound with decent growth and decent profitability with negligible debt. Moreover, company commands a market cap of around 21,000 crore, so it is a mid-cap company. The only concern is its valuation. At current levels of 4,200, Navin Fluorine commands a PE ratio of 75. Now that's rich valuation. So there is a little scope of price appreciation in the near term. However, the future growth prospects are clearly bright. If you already have the share in your portfolio, then you can hold it for long-term price appreciation. And if you don't have the share in your portfolio, then you can consider adding it in a systematic manner and buy on dips. Now tell me in the comments, which company do you want me to cover next? And if you find this analysis useful, do like and share it. I'll see you next video. Till then, take care.